This is In Touch with Terri, a power-packed podcast for the medical aesthetics industry.
I just discovered your podcast, and I feel like I've hit a gold mine.
This is someone who's got a lot of knowledge. She's been there, done that.
Terri Ross is a former Fortune 500 executive, international speaker, founder and co-CEO of Apex Platform, and Terri Ross Consulting.
Just listening to her energy and her passion and just how hardcore she is.
Her knowledge of the industry and just her connections in general are phenomenal.
In Touch with Terri will bring you solutions to increase operational and employee efficiency and practice profitability. Plus, feature some of the top industry experts as guests.
The Apex team literally changed the game for us.
Terri, your courses and your podcast are just so helpful.
She made me feel like I could do this.
3, 2, 1.
Here we go!
Now, here's Terri.
Hello, everybody. What's up? Welcome back to another episode of In Touch with Terri. I am always excited to be here with you guys. And today I have the pleasure of having my good friend and colleague, Mattia, Senior Vice President with CareCredit, here with us to chat and give you guys some valuable insights as it relates to your practice in financing. I really wanted to have him on, one, a little bit about, again, all this talk about recession and what we're doing. And two, more importantly, is that for you guys that have followed me and that you know me, I've done, again, 26 conferences last year. But more importantly, one of the things that we try to solve in the aesthetic space, and I say solve because we need to solve a problem, and that is that we want profitability, we want more revenue. We want patients to have a better outcome. And we know that there are so many people in the buy now, pay later, but yet when we work with practices, they are struggling to figure out a way to incorporate patient financing within the practice. And so Nick and I go way back. CareCredit is literally, sort of the gold standard, not speaking out of term about other financing companies, but, in the space. And I really wanted to have him on here to talk about the value of patient financing to your clients, how it can really help, number one, 10x your business, and more importantly, give your patients the opportunity and the outcome. Look, at the end of the day, again, we talk about this. This can be some churn and burn business where you have high volume, or do you want the right quality patients coming in the door that are willing to spend the money? Whether we have it or not is not up to us to decide, but it is up to us to say, my obligation is to make sure my patient gets all of the treatments that they need to be able to get the outcome they're looking for. And in order to do that, we can offer them financing. So Nick, oh my God. Hey, my man, what's up? Welcome.
Hey, how are you? Thanks for having me on.
You are so welcome. This has been long overdue. So I know you have a very extensive bio and I don't need to read it. I would really love if you would just share with my tribe a little bit about you and your background with CareCredit.
As you mentioned, my name is Nick Mattia. I'm the SVP of Specialty and Wellness Solutions for CareCredit. CareCredit's a part of the Synchrony Health and Wellness platform, and I've been with CareCredit since 2005. But in my current role, I work alongside a lot of our general managers on strategic initiatives for the medical industries that we all ultimately support. If I just say this about CareCredit, for over 35 years, CareCredit's helped improve the financial experience and outcomes for providers and their patients. And we help make it easy for people to get the care they want and need right when they need it without having to delay treatments or appointments.
Okay, so you mentioned, and I really want to make sure everyone has got the right expectations. You mentioned Synchrony Bank. Tell us a little bit about the bank and why you guys are a little bit different.
That's a great question, Terri. Actually, Synchrony is a premier consumer financial services company delivering one of the most complete digitally enabled product suites within our financial ecosystem. We encompass a broad spectrum of industries, including digital, retail, telecommunications, home auto, outdoor, and health and wellness, which CareCredit is actually a part of.
So, Nick, you mentioned Synchrony Bank. And so for the tribe, for the listeners, can you just share a little bit about why being a bank might be different than some other financing companies who are not a bank?
So we control all of our underwriting, and we look at each of our medical industries, a little bit differently, right? Just depending on what the patient is going to need and depending on what that average ticket cost could be. We issue our own cards. We're a revolving line of credit, a little bit different than some of the other financing companies out there in that some of them operate as like an installment closed-end loan product. We are this revolving line. We have about 12.7 million Care Credit cardholders today with about 40 billion in available credit that's actually not being used, right? It's called what we call available credit. So that makes us a little bit different. So they can apply today, get approved, use instantly, and then also come back and reuse for additional services or procedures.
I mean, that is a whole lot of money. Well, thank you for explaining that. Number one, I think that's very fascinating to know. And I don't know if a lot of people actually know that. I mean, I know over the years you and I have discussed that. So thank you for sharing. So, what I want to focus on is about 5 things. I want to focus on why aesthetic practices are suited for patient financing. I want to talk about the right way to introduce financing options with you, Nick. How financing can increase overall revenue, not just retail sales. I want to get into some exciting changes that Care Credit is able to be introducing this year. And then some of your success stories, if we can talk about that. So you just expressed a little bit about Care Credit, why we're different, this revolving bank, you guys do the own underwriting and all this open line of credit. Before we just kind of even dive into patient financing as a whole, tell us where you kind of see the market today.
Mm-hmm. Maybe it'd be even better if I could start if I back up and kind of start where we started off, right? We've been in the cosmetic industry working with aesthetic and reconstructive practices for over 15 years. So it's really part of our DNA, right? Mm-hmm. Care Credit's been around since 1987. So we have weathered a number of economic storms and conditions since then. But when we started in cosmetic, we initially started working with plastic reconstructive practices. We heard from our cardholders, and that's really, that's our barometer for us is like, what do our cardholders need? What do our cardholders want? Where do they want to use their card? And we heard from them and they wanted to use the card right in more places for their aesthetic needs. We expanded into hair restoration, followed by dermatology, medical spas, and now we're in day spas. And that really has greatly improved the network of providers for our cardholders. So if you start to think about like what is the current state of the cosmetic industry as it relates to patient financing, we see a consistent higher average tickets and increased repeat purchases from both patients and cardholders. With the Care Credit credit card, I should say, once a patient applies and gets approved, they're able to use that card immediately for that procedure. And then they have the ability of that revolving option.
I love that. That kind of went into like, what is Care Credit? What do you do and why you do it? You guys have this longevity in the space and you have, a proven track record being in aesthetics and now this expansion business. You mentioned you're seeing greater retention and higher revenue usage. Mm-hmm.
Our average tickets, most people would think for a medical spa, maybe the average ticket would be lower than maybe some of the invasive procedures out there, but we're actually seeing a higher average ticket within the medical spa arena, close to the average first ticket of roughly $2,025.
$2,025, and that's for a typical med spa?
Yep, for a typical med spa. Okay. That's what we see on Care Credit.
Okay, interesting. Okay, and then what about plastics? Do you have any statistics on that?
It depends. Within plastics, because sometimes plastics can be a mix of invasive and minimally invasive, so it can dilute it. It's a little bit higher that we see within plastics because some people, it depends on where they are in their patient journey, right? Some people will start out and they'll get a minimally invasive procedure within a plastics practice, right? And that may lead, it may be the your gateway procedure or treatment into getting something invasive, or it might actually work just the opposite, right? You start off with something invasive and then you do some fine touches on the minimally invasive.
I think patient financing is a must, okay? And I think one of the things has been who's educated on it. When do they talk about it? Is it rolled out in the consultation? Is it rolled out when the patients are walking out the door? Do you, just from your 17 years being there, do you have any statistics to share, whether it's best practices that are so successful with patient financing versus others that are not?
We're seeing a mix of new and established med spas really start to adopt financing. They're offering care credit alongside other tender types early on in conversations with patients and also on their website, right? They want to make sure wherever they're touching the patient, whether it be social media, when they call on the phone, that ultimately they're talking about patient financing and that they also accept other tender types, right? I'll talk about this a little bit later on, but as we think about the path to care, how people research a specific procedure or treatment or service, sometimes they're researching, of course, this is probably no surprise to you, before they even pick up the phone. They're essentially going out on their own and going to a review-based site or going to social media just to learn about things. So we like to say is you're going to find the most success when you really don't hide financing. You're presenting it upfront and equal to everyone. And start that payment conversation early with patients. Share a QR code that we provide or a custom link on the website to see if they pre-qualify. And if you mention financing options when scheduling appointments during check-ins and checkouts or in patient forms, it's a good idea to be consistent across all media channels.
I know some practices and some of the things that we've encouraged practices to do are kind of what you just said, get people approved before they even come in so that they really don't even have a reason or any objections to say no to the treatment plan that we teach practices to be doing. Do you find that this is what some successful practices do? And even if patients could afford it and have the money, are they choosing financing just as a different
That's right. Yeah, we do see financing at successful practices. They're offering it to everyone, and they are talking about it on the phone when they're scheduling an appointment. As you just mentioned, the staff spends valuable time with that patient during that consult process. And when you think about the patient acceptance rate and whether they're going to move forward or what have you, that time is valuable. I had the opportunity to listen to you in Las Vegas, right? And you were talking about time-based value, right?
Yeah.
And how you have to be able to monetize the time you spend. So I think giving the patient every opportunity to move forward with the care that they want or they need, I think it's a best practice to just offer financing.
Totally agree. Okay, I'm going to ask you some hard questions if you don't mind, because I mean, of course, I hear this all the time, and I'm not even that adept at all of these different financing companies. I mean, I'm familiar with them and maybe some of the different services and offerings that they have. And one thing that I think people think, and I say this because I used to kind of teach on it in some of my talks, right? Mm-hmm. But people would be like, oh God, care credit takes such a high percentage. I think practices think they're going to be losing money. Is that true?
No. So first of all, we're a non-recourse provider, right? Which means that we do charge a merchant discount rate upfront. You're funded in 2 business days less the fee, so it's net funded, right? Mm-hmm. But when we say non-recourse, if the patient stops paying or whatever the case might be, the practice is out of the equation there. We're dealing directly with the cardholder and how the payment works. Unlike there are some recourse options where that's not necessarily the case. So we take the practice out of the collection business. We do charge a merchant discount rate now, and that depends on the plans that are offered. So when you apply for the Care Credit Card, or if you're an existing Care Credit Card holder, one of those 12.7 million card holders that are out there, and they come in, the practice is able to offer a bunch of different plans that, between 6 months deferred interest all the way up to 24 months deferred interest, or extended payment options that go out to 60 months. Those plans have different merchant discount rates. So what makes it really good for the practice is the practice can control ultimately what they're paying in a merchant discount rate by, first of all, setting up at the practice level, and then also on carecredit.com, because the practice is listed on our provider locator on carecredit.com, what plans they offer, so they can set the expectation with the patient when they come in. So there are different, you don't have to accept all plans. You can accept some plans. And that way you kind of control ultimately what you pay in a merchant discount rate.
Okay. So that kind of clears up that. And, when we talk about who you approve, like who's your ideal client, like what is the subpar rate? Like how low do you go to give these people that may not have the best credit still an option?
Yeah, not to give you a cryptic answer, but we look at 18 different criteria. So like debt to credit, debt to income, FICO quality, right? A lot of these debt to equity ratios. And it's built really into an algorithm. We give a decision in 26 milliseconds. It is a similar back-end system that we use for a lot of our other cards out there, outside of Care Credit and outside of health and wellness, but it has a medical underwriting algorithm built into it. So that being said, we can approve as low as $500 and up to $25,000, and in some cases, a little bit more than that.
Okay, so it's very vast. I think there's just so much education that can really be done for the team and the practice, which is obviously, what here at Apex Platform and what I've always taught and preached about is that there's so much opportunity, and what we don't want to do is just leave money on the table or leave patients not feeling like they can't afford things. So I'm loving this conversation. When it comes to open, you said that, people may have cards with all this open, right, money to spend. And I'm almost asking for myself not myself personally, but like from a self-serving perspective, when we're trying to say, hey guys, it's about getting new people in the door. It's about nurturing the ones you have. Is there a way that practices can work with you guys at your Care Credit team to find out how much open
available credit?
Available credit.
So if they originate the application is started with that practice, and that practice can ultimately see what the cardholder available credit is. As you can imagine, if we gave every provider access to everybody, then it would probably be like, there would be a lot of communication to that cardholder, and that probably wouldn't make them feel pretty good. So if they originate at that office, you can see their cardholder available credit. If they come in with an existing line, they can look up the line online. If they don't know what the line is, they can also do a credit line increase if they need additional funds as well. But here's the thing, I would say, absolutely talk about Care Credit, present Care Credit everywhere, because you don't know that you might be talking to somebody who is a dental Care Credit card holder. They originated a dental office or a veterinarian office or an ophthalmology or an audiology or primary care, right? Or orthopedics, because we do service all of these different industries. If you don't mention Care Credit, then you might be losing out on introducing yourself as an accepting provider.
This is such a huge opportunity for you guys listening that offer Care Credit. Please take advantage of this opportunity to work with your Care Credit team or the resources that you have within the practice to look at your patients that have this open and available credit. This is such a tremendous opportunity to, one, reinvite them back into the practice, two, reevaluate yourselves in your consultation process in terms of, again, are we really, really building that long-term treatment plan to allow these patients, again, to get the outcome they're looking for and be able to afford it. I cannot stress that enough. Nick, I think Care Credit extended enrollment to nurse practitioners in states that allow that independent medical practice. What is that done for the industry and for you?
Sure. Great question. The recent expansion with nurse practitioners in states that allow independent practice gives our cardholders more access to products and procedures with these providers, right? We want to expand that utility of the card where our patients request us to offer it. So the recent expansion helps both providers and cardholders.
Okay, I love that. Obviously, I know there's probably so much controversy around different states and who can do what. And, that's not my forte. That's sort of the AmSpa and the legal team. But I think that there are so many tremendous providers out there opening up. I mean, we have so many amazing clients that, are NPs that have their own place and they're so successful. And I think that the ones that are, again, these uber successful medical spas are offering patient financing, fueling to do exactly what you're saying. Where do you see recession, no recession, people willing to spend money, where everybody's, still all up in arms, but I think we've seen this business still continue to grow at exponential, right? Double-digit growth, the male market expanding. Do you have any insight into sort of what you're seeing from a spend perspective? And then, for patients that are hesitant to want to open up, another card with a line of credit, what can we really expect here from this?
I think you can assume that for medical spas, in order to prepare themselves for patients that may be hesitant to spend, is continue to offer financing to everyone. Don't assume your patients know about their financing options. Offering cost transparency, the option to pay over time can help you build trust and satisfaction with your patient base. And then based on the path to care, and that's a research study that that we both have a white paper on, and then it's also publicly available off carecredit.com for practices to review. Patients are researching providers, procedures, payment types. It's good to let patients know about those financing options upfront because that'll help them move forward with care.
This was so great. Is there any final sort of key takeaways that you want to share with the tribe in terms of, I think, one of the title of this podcast that I really want to make it is how do we again leverage patient financing with Care Credit to build your practice's revenue and retention? And I think it's just so important, but you've given such valuable information. I think we talked about a lot of great things you guys are doing, the difference that you guys are a bank, all this open credit people have and the successful practices using it. But any final thoughts, and then how can people find you if they don't offer Care Credit?
Well, so let me just say a couple of things. First of all, thank you very much for having me on here. This has been really great and long overdue, like you said in the very beginning. There are a couple of really cool things that we do, and we have, we talked about like success stories, but we have we have My Story with Care Credit. It's actually an excellent collection of amazing, heartwarming stories from our cardholders on how they've been able to move forward with care that they want. We have this Care Expert Vodcast, which obviously can be converted to a podcast, helping consumers understand medical procedures better. And then we also provide Care Credit content for patient resources for the practice. And that's something that providers can use as they want to talk about Care Credit. They want to get boilerplate copy on how to talk about Care Credit. They want to have a payment calculator on their website. They want a custom link or QR code. And then two last things I'll talk about for the tribe here are we recently introduced the ability for patients to see if they could be pre-qualified with Care Credit. So patients can opt in and check and see if they'd be approved with really no impact to their credit score. And then package solutions in select industries like medical spas, we're testing the ability for practices to offer package solutions for their patients for the services that would be rendered within 90 days. It makes it easier on the patient as they can bundle everything that they would have had completed within that 90-day period under one promotional plan, so they don't have to manage through multiple promotional plans. That makes it much easier for the patient.
Nick, when you say package solutions, would that go along the lines of, because again, if one of the things we teach is this whole treatment plan value.
Sure.
Is that similar that say the provider gives me this treatment plan, I have to do those services within 90 days, and that would be different than me just getting approved for a flat amount on the card?
Actually, you are approved for a dollar amount on the card. And let's say, hypothetically, you're approved for $10,000. And the treatment plan is $5,000. And that's going to be rendered over 90 days. You can run the transaction. Prior to this, you would have only been able to charge what you would have rendered within 30 days. But now you're allowed to go out to 90 days because, you would have had multiple promotional plans. You would have had to charge 6 months for $1,000, 6 months for $1,000, right? So now you can bundle that as long as you're going to render it within 90 days. The only thing I'll say as a caveat there is with your financial policy with your patients, if you're not going to render it within 90 days, you have to refund the unused amount. Sometimes it's they're not able to get in, or you had a cancellation or what have you. So that being said, you just need to be cognizant of that. If they do cancel and they can't render it all within 90 days, you have to refund what's not being used.
Got it. Well, I love that though, because I think again, if we're going back to the value now that you guys, Care Credit, is offering this package solution, which I think is amazing. That too, when we're thinking about the training aspect of this, that if we're just doing a good job, right, in the consultation process or the pre-qualifying before I even come in the door, that you're letting me know, hey, based on however, again, I'm feeling, because people buy for emotional reasons, that I'm going to want to come in within this 90 days and that's all scheduled and planned out versus letting me walk out the door. Right. And then we run into those challenges. So another amazing opportunity. Well, this was fabulous. Nick, thank you so much for being on here, for sharing such valuable information. And you guys, really, thank you again for listening, always for tuning in to In Touch with Terri. So honored. But I really hope you find this podcast valuable. If you're not incorporating financing, please, please, please reach out to us at our Apex team. We will teach you how to do it. and incorporate it. This is going to help your patients with retention, help them get better outcomes, help you make more money. So Nick, my man, thank you again. And you guys, I will see you on the next episode of In Touch with Terri. Ciao.
Thanks for listening to In Touch with Terri. We invite you to schedule a discovery call with our Apex team. The link to apexplatform.com can be found in the show notes. Thanks again for listening, and we'll see you on the next episode of In Touch with Terri.